Good morning, this is Pal Walker at Mission Winners doing a key list video. No, we're not, I'm teasing. Doing a video on the ETFs. What do you say? Let's rock and roll with it. Why do I do this? Just helps frame up the market action. And by knowing what's currently going on, it can give us an idea of what could go on in the future. We don't forecast, we just get in line with what is, but the charts talk to us and we just listen. That makes it easy. Here we go. Biotechnology Index, ETF, gap down, but had a good close on this bar. Look at this. People say, oh, that's a bad bar. Note the open and note the close in volume. It's actually a very constructive bar. What's one negative, though? It finally gapped below the 50-day, and it did have a lower low right here. Until this starts lifting above the highs of this bar, you kind of leave it alone. Biotechnology. Okay. And what could that be saying? Simply that at this point in time, biotechnology's lost a little bit of leadership. Is it going to continue falling? I don't have a crystal ball, and nor do you. But it did lose the 50-day, and we'll watch and see what happens. ARC Innovation, this is a good ETF, okay, and it's had a really good run, but it got hit fairly hard. It closed really good on this bar, though. See this? Closed near the highs, so they supported it. But it is now below the 50-day, the first time below the 50-day in a long time, okay? We want to see this reclaim the 50-day. But again, it shows another area where some leading technology got hit a little bit. Next one, cloud computing. Another one that has been strong but fell below the 50-day. Had a good close on this bar, but it needs to recover the 50-day. Fell on an increase in volume, by the way, on Friday. So we'll see. But by the way, did you notice the theme just looking at a couple of these? They lost a little bit of leadership. The IBD 50 is still above, this is an ETF, is still above the rising 50. That's positive. This was a good bar. This was a good bar right here. Okay, see the volume? Always look at price and volume and the key moving averages. This is the 80 EMA, the 21 EMA, the 50 SMA, and the 200 SMA. So still has support on the 50-day. We'd not be happy if it starts losing the 50-day also. This one focuses on max list stocks, FV. By the way, if you ever wonder, what's the ticker symbol on this? It's always in the upper left-hand corner, all right, FV. And again, it's hanging in above the 50-day. So isn't that interesting? We've seen a couple of areas that are falling below the 50-day, but we're still seeing some good pockets of strength above the rising 50-day. Gold miners, do I need to say anything about this? I don't think so. Junior gold miners, I don't think so. Gold, I don't think so. But I will say this. This is why we look at the charts. Everybody says, well, gold is a hedge against inflation. Gold will keep me safe. Well, all I know is this don't look so good to me. And I'm going to rant here for a minute. Here's gold, okay? And I'm going to go back, way back here, all right? We're going to keep on going back here, folks. I'll go all the way back to 2014, 2011. Gold hit around $183 a share. Okay, the ETF fell, then rallied all the way back up there. You see this? Okay, there's gold. Basically, it's where it was in 2011. I'm not making this up. You see that? Here's QLD. Take a look at this. Gold is basically where it was in 2011. Here's QLD. Here's 2011. It was around $5 a share, and now it's over 100. I rest my case. Be careful of all the stuff you see on TV, okay? Here we go. Continue. On down the line, nothing. We go back to the daily here. Just had to point that out to you. I've got people, managed people that I talk to, and they're like, well, what about this? And I say, well, let's look at, the charts don't lie. Continue onward. Biotechnology, as I stated, lost a little bit of leadership here. We'll watch and see what happens. North American Technologies still has near support on the 50-day. That's good. Medical, a little bit below the 50-day. The trend is still up. Home builders, still above the rising 50-day. Trend is still up. This owns a lot of the max list stocks. Fell below the 50-day. The trend is still up, but a little bit lost of leadership. Small cap, look at that. I just showed you a bunch of ETFs that have fallen below the 50-day. Small cap still hanging up above the rising 50-day. It did have a heavy volume selling bar there, though, didn't it? Still above the 50-day, but that one mom and dad selling, that's serious. Mid cap, still fairly strong. Note this bar. Look at the bar here. Heavy volume selling. Look at the bar here. Selling, but not heavy volume. Mid cap. Oil services hanging in there fine. Above the moving averages. Remember, by the way, I'm doing this. Remember these things. It's like, gosh, this is a weak one. I got to remember to stay away from this. Oh, oil services, that's pretty strong. Maybe I should look at some stocks in that group. Software has been strong for a while. Got a little loose here. Still above the moving averages, but gotten a little loose. Got to be careful with that. NASDAQ 100, QLD, below the 50-day. Look what this did. Look what this did Friday. This thing fell on heavy volume. This needs to get back over the 50-day. NASDAQ 100, got to be careful. NASDAQ 100 not leveraged. Similar situation. By the way, look at the volume on that bar, folks. You can say, ooh, that was a heavy volume bar, and this bar was heavier. There we go. And this bar was heavier too. Cloud computing, another cloud computing, still hanging in above the 50-day, but fell on a slight pickup in volume Friday. Not a bad close. Needs to recover above the 50-day. Do you see the theme here over and over? Technology has been really strong, but it's lost a little bit of leadership. Will it continue? I don't know. But just we live in the now and we need to be cognizant, be aware of that. It helps guide us. Silver, this is awfully loose, okay? Just be aware of that. Steel has been leading, fell a little bit, but it's still above the rising 21-day. There's a good story here is everything's falling apart with COVID, but by Jove, they've been buying steel for a while, and you need steel to build stuff. Semiconductors, technology, still above the 50-day. Fine. Spiders, right on the 50-day. But boy, that sucker fell on heavy volume on Thursday and Friday. This needs to find support on the 50-day, all right? You take that action and combine it with the action on a lot of leading stocks. What's it do? Causes us to be a little cautious. That's all. Just a little cautious. What's going to happen next? I don't know, but after looking at a million charts over the years, you start to develop an idea of right here until this starts to lift. Be a little cautious. Don't impose your will on it. Let it tell you what to do. And that's all. SSO, the leveraged one, similar situation. Solar lost some leadership here. Still, it's below the 50-day now. Got to be careful with solar. Small cap, leverage, TNA, still hanging in above the 50-day. See that theme? Small cap. Okay, there we go. Aerospace, hanging in, still above the 50-day. Don't want it losing the 50-day, but it is still above. Leadership there. Biotechnology, lost a little bit of leadership, below the 50-day. Home builders, still above the 50-day. That's good to see. But note the volume. I'm really big at Mission to Winners on looking at price and volume. Look at this bar. That wasn't Uncle Ernie selling. That's some serious volume. Found support on the 50-day. We don't want it losing the 50-day, okay? Materials right on the 50-day. We'll have to watch it. Still okay. Communications on the rising 21 EMA. Folks, there's power for you. Look at that. I just showed you a ton of ETFs. Here's one that's still above the rising 21 EMA. There's still strength there. Will it continue? I don't know, but at this point in time, it's exhibiting more strength in other areas. XLC. So what do you do with that knowledge? You go in and you say, what the heck does XLC own? Some of those stocks are hanging in. There we go. And again, I'm not recommending buying this. I'm just trying to educate that we can do some homework on. Maybe this is an area to look at. That's all. Energy, just fairly strong. That's good to see that money's rotated out of certain areas and it's in energy. Financials, still good. Look at that. Lost a little bit of power here, just a little bit below the 8 EMA. Now, where would I get concerned? If it starts to lose the 21 EMA and if it starts to lose the 50 EMA. You really don't like seeing financials getting hit. They're not at all, though. But be aware that if they start to, be cautious. Industrial's still hanging in. That's fine. Technology, a little bit below the 50-day. Heavy selling on that bar, folks. Heavy selling on this bar. Be aware of that. You really don't want it losing the lows of these bars right here. Okay? Technology has been leading this advance for a long time. Okay? I mean, look. It's almost a year ago. Has been leading. I don't want to see it. We don't want to see it losing its leadership. But if it does, by going through this ETF list that I do every weekend for people, we can see where money might be going. Isn't that great? Organization. Consumer staples, I'd stay away. That sucker fell below the 200-day on volume. All right. Utilities, dropping here hard. Now, think about this. Utilities, that's a safe spot. That's a safe place to park money, and it's losing leadership. What does that mean? Maybe money isn't going to be becoming more aggressive in what it looks for. Not reckless, but maybe more growth-oriented. We'll see. So don't take this as all bad. One thing it could say, though, is there may be pressure on interest rates, and rising interest rates has a negative impact on utility stocks, okay? Because they pay a dividend. There's some knowledge for you. Healthcare still hanging in, lost a little bit of leadership. You got some selling here, though. There's some heavy selling on this bar and this bar the last 2 days of this week. All right? Be aware of that. Healthcare. Now, what was the catalyst for this making the big move? I'm going to go to the weekly. What was the catalyst for this making the big move, folks? Well, related to COVID. I'm going to refresh this to make sure everything's good. There we go. What was the catalyst? Yeah, related to COVID. What is it forecasting? Maybe, and again, I'm not saying this is what's happening, but could it potentially be they're starting to get a grasp on COVID, and after that, the allure for healthcare stocks will diminish. That's all. It'll tell us what to do. That's the great part. Consumer discretionary, another consumer area, got a little loose here, all right, to be aware of. Metals and mining, still hanging in there. Now, consider this. We know, okay, here's the power for you. Here's gold, UGG, okay? Here's metals and mining. Oh, that's still pretty good. What does that say? Well, doesn't look like gold's a good place to be, but there's some things that this ETF is involved with in metals and mining that's acting pretty good. There you go. Retail ran up, pulled back, still hanging in there. We'd hate to see it lose the 50-day. There's a great lesson here, and I've said this before. Everybody says, oh man, the consumer's dead. Nothing's going on with the consumer. Well, all I know is from April, May of last year, that was a good move. There we go. That's retail-related stocks. That's why I don't watch the news or listen to the news too much. Don't be ignorant of the news, but let the charts tell you what to do. There's tremendous information in the charts. We're almost done here. Software has had a good run. Look at this. We've been involved with software stocks. A little bit of loss of leadership, but it's just on the 50-day, and it didn't do it on really heavy volume, so that's okay. And then we go back to the top.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.